Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the topic of upcoming stock splits you won't want to miss. Imagine turning one share into multiple shares overnight without spending a dime. Sounds intriguing, right? Stock splits offer that very possibility and can open up new doors in your investment journey. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Stock splits are significant events in the world of investing, yet they often go underappreciated by those new to the market. But why should you care about stock splits? Well, stock splits can potentially make shares more accessible to a broader range of investors by lowering the price per share, even though the total value of your holdings remains the same. This can lead to increased liquidity and make it easier to buy and sell shares. Additionally, companies may opt for a stock split to signal confidence in their growth, which can attract more attention from potential investors. To make informed decisions around these stock splits, savvy investors often turn to technical indicators. Our first spotlight today is on Deckers Outdoor Corporation, ticker DEC. Currently, Deckers Outdoor shares are trading at approximately $865 per share. Over the past year, this stock has seen impressive growth, with a 60% increase, and it has reached a 52-week high of $1,169.89. But what exactly does Deckers Outdoor do? Deckers Outdoor Corporation, also known as Deckers Brands, is a well-known footwear designer and distributor. Their portfolio includes some popular brands you might be familiar with, such as UGG, Koolaburra, and several other notable names in the footwear industry. These brands are recognized for their quality and innovation in the market, and Deckers has a strong reputation for consistent performance. Now, as investors consider how to approach Deckers' stock post-split, using the 50-day and 200-day moving averages can provide valuable insights. Let's dive into the current chart. As of today, Deckers' 50-day moving average is around $980, while the 200-day moving average sits at $900. The 50-day moving average has consistently stayed above the 200-day moving average, forming what's known as a golden cross. This is typically a bullish signal and suggests sustained upward momentum. Investors might want to keep an eye on whether this trend continues after the split. Additionally, let's check the Relative Strength Index, RSI. Currently, Deckers' RSI is hovering around 65, which is approaching the overbought territory. If the RSI surpasses 70 post-split, it could indicate that the stock is overextended and might pull back soon. This could present a better buying opportunity at a lower price. So why is Deckers Outdoor opting for a stock split? The company has announced a 6-for-1 forward stock split. This means that for every share you currently own, you will receive 6 shares after the split. If you own 1 share now, you'll have 6 post-split. Similarly, if you hold 100 shares, you'll end up with 600 shares after the split. However, the price of each share will be adjusted accordingly. For example, if Deckers shares are still around $865 when the split occurs, each share will be valued at approximately $144 after the split. The reason behind this move is to make their shares more affordable and accessible to a broader base of investors, including their employees. Another key indicator to monitor post-split is the Bollinger Bands. Currently, Deckers' stock price is nearing the upper Bollinger Band, which signals strong upward momentum. If the stock continues to hover near or above this band after the split, it could be an indication that the stock is overbought, suggesting caution. By understanding these indicators, investors can be better prepared to navigate the market post-split and capitalize on opportunities. But before we proceed, here's a question for you. How do you think stock splits affect a company's image in the eyes of investors? Comment your thoughts below. Next, let's talk about Tetratech, ticker Tetratech. Tetratech shares are currently trading at around $230 per share. Over the past year, Tetratech has performed admirably, with a nearly 38% increase in its stock price, and it's close to its 52-week high of $234.94. Additionally, over the past 5 years, the stock has seen an impressive increase of 181%, making it a solid performer in the market. Notably, Tetratech is also a dividend-paying stock, which adds another layer of appeal for long-term investors. For those unfamiliar with Tetratech, the company is a prominent American consulting and engineering services firm. They provide a wide range of services, including consulting, engineering, program management, and construction management. Their expertise spans various sectors, making them a critical player in both public and private infrastructure projects. As investors analyze Tetratech's stock, they should keep an eye on the MACD, Moving Average Convergence Divergence indicator, especially post-split. Currently, the MACD line is about to cross above the signal line, which could indicate a bullish trend ahead. A bullish MACD crossover post-split might be an ideal entry point for investors. Moreover, after the stock split, If the price stays above key moving averages, like the 50-day moving average currently at $215, it might suggest that the stock has found a new level of support, indicating continued investor confidence. Also, watch for trading volume increases. If Tetratech's volume spikes after the split while the price breaks above resistance, this could confirm the strength of the uptrend. However, low volume price movements could signal a lack of conviction in the market, so investors should be cautious. The primary goal of this stock split is to make Tetratech shares more accessible to a broader range of investors and to enhance liquidity in the trading of their shares. With a lower price per share, Tetratech is likely to attract more retail investors, which could increase trading volume and potentially lead to a more stable market for its stock. The key dates for this stock split include September 5th, when each record holder of common stock will receive 4 additional shares. The stock split is expected to be effective after the close of trading on September 6th, with split-adjusted trading commencing on September 9th. Finally, let's discuss MicroStrategy, ticker MSTR. MicroStrategy shares are priced at a hefty $1,426 per share. Over the last year, the stock has soared by 228%, and it has reached a 52-week high of $1,999.99. Over the past 5 years, the stock has seen an extraordinary increase of 1,058%, making it a standout performer in the tech sector. MicroStrategy is a well-established American company that specializes in business intelligence, mobile software, and cloud-based services. They develop software that helps businesses analyze both internal and external data, enabling better decision-making processes and the development of mobile applications. Their products are essential for companies looking to leverage data to drive growth and efficiency. Given MicroStrategy's high volatility and its significant investment in Bitcoin, the Relative Strength Index, RSI, and Bollinger Bands can be particularly useful indicators post-split. Let's take a closer look. The current RSI for MicroStrategy is around 75, indicating that the stock is overbought. This could suggest that a pullback is imminent, so it might be wise to wait for a better entry point. Meanwhile, the Bollinger Bands show that the stock is consistently touching the upper band, further confirming the stock's high volatility and potential overextension. Additionally, keeping an eye on volume changes and the MACD after the split could provide further clues on whether the stock is likely to continue its uptrend or if a correction is imminent. Considering MicroStrategy's significant investment in Bitcoin, monitoring Bitcoin's price trends alongside the stock is crucial, as a decline in Bitcoin's value could negatively impact MicroStrategy's stock price. The MACD is currently neutral, but any significant movement post-split could signal a strong trend direction. One of MicroStrategy's most significant strategic moves in recent years has been its investment in Bitcoin. The company has converted a substantial portion of its cash reserves into Bitcoin, positioning itself as a major player in the cryptocurrency space. This move has not only increased the company's visibility, but also tied its stock performance to the volatile world of digital assets. While this strategy has paid off handsomely during Bitcoin's bull runs, it also introduces an element of risk that investors need to consider. On July 11th, MicroStrategy announced a significant 10-for-1 stock split. This means that for every share you currently own, you'll receive 10 shares. If you hold 1 share now, you'll have 10 post-split. If you own 100 shares, you'll end up with 1,000 shares after the split. The price of each share will be adjusted accordingly, so if the stock is trading at $1,426 before the split, it will be approximately $142.60 per share after the split. The purpose of this stock split is to make MicroStrategy's shares more accessible to a wider range of investors and to increase the liquidity of the stock. With the stock currently priced at over $1,400 per share, many retail investors might find it challenging to buy even a single share. By reducing the price per share through the split, MicroStrategy is likely to see increased participation from smaller investors. The record date for this stock split was August 1, 2024, and the shares are expected to be distributed after the close of trading on August 7th. Split-adjusted trading is set to begin on August 8th. As we conclude, it's evident that each of these companies, Deckers, Tetratech, and MicroStrategy, has positioned itself strategically with upcoming stock splits. Deckers, with its consistent 118 to 20% CAGR over the past 5 years, continues to demonstrate strong market growth, largely fueled by its robust brand portfolio. Tetratech has also shown significant performance with a 181% increase over 5 years, bolstered by its diversified services in consulting and engineering. Meanwhile, MicroStrategy, driven by its bold investment in Bitcoin, has seen an extraordinary 1,058% growth, These splits are designed to make their shares more accessible to a wider range of investors, potentially increasing liquidity and market participation. Each move reflects a strong confidence in future growth, making these companies worth watching closely. Stock splits like these can be beneficial for investors as they lower the price per share, making the stock more affordable and potentially increasing trading activity. However, it's important to remember that while stock splits can make shares more accessible, they do not change the underlying value of the company or your investment. They simply divide the existing shares into more shares at a lower price. As always, it's crucial to do your own research and consider your investment goals before making any decisions. Before we wrap up, let me ask you this. If you could choose one stock to split tomorrow, which one would it be and why? Drop your answers in the comments. Let's get the discussion going. Thanks for tuning in to Simple Investing Secrets. If you enjoyed this video and found it helpful, please hit the like button and subscribe to our channel for more content like this. Remember, this video is for informational purposes only and does not constitute financial advice. Always consult with a financial advisor before making any investment decisions. See you in the next video.